Storm front ahead. This is Tom Aspray from the Viper Report with our week-ending video as of January 24th, 2025. Having been through a couple of storms like that in my lifetime, we kind of all know what it could or could not mean. Well, we're seeing some similar things shake out for the stock market currently, and though this could just be a brief interruption in the overall trend, there's some signs there that you need to be aware of for the next couple of weeks. It was a solid week for the overall markets. You can see Dow again led 2.2%, 2.6% with gold too. So solid gains. Nasdaq, S&P 1.6, 1.7, and even the Russell managed to record positive signs. Often, when the markets close for the day or even for the week, I first look at this page in stock charts. What stood out for me on Friday was most of the averages were lower that day. Nasdaq down 0.5%. S&P 600 small cap also lower. Mid caps lower. Nasdaq 100 down about the same as the Nasdaq Composite. Even the VIX was down, which was interesting, and roughly the NYSE just barely eked out a gain. So another thing I look at that's really handy with stock charts is I look at the market movers. This is for the S&P, most active. Okay, so I want to see where the volume is. So if you hit this candle glance button, and I have it set on a custom, so we'll go to like a 2-month, just to give me an idea of what some of the most widely traded stocks did and how that sets up. So not a lot of positives if you look at the short-term daily charts. We have Nvidia, had a bearish engulfing pattern here, so looks like back to the 140 area. Apple gapped lower last week and is still under pressure. Palantir had a gravestone doji here on Friday. AT&T was one of the few. SMIC, maybe a bottom or a pause in the downtrend, etc. So Intel, not great. Tesla, drifting lower. So gives me an idea of what might be ahead in next week's trading. In terms of the storm cloud, that really refers to the weekly analysis of some of the averages AD lines. So here we have the Spider Trust, the weekly, nice strong close, up 1.7%, showing a pattern of higher highs here. However, if you look below that, you can see in the S&P AD line we have lower highs. Okay, that's a potential bearish divergence. So the worst case scenarios we see a sharply lower close, like back below the 20-week EMA in the next week or two. That would turn the focus on these lows we made at the start of the year, as a drop in the AD lines below that would create a new downtrend as well as a divergence. The divergence doesn't have to be resolved next week, but it should be released in the next several weeks. Stocks only, shows the same, sort of pattern here. It's well below, and if we continue higher, we're going to see really strong AD numbers to push the AD lines to new highs with the averages. Same NYSE also in a similar state. So moving averages are flat to rising. So that's okay. In looking at the daily charts, you can see that we definitely got a new high in the SPY. After moving strongly above the R1, which is a good sign. So, we have minor support here around 600, 603. So you can see moving average support down here, 596. That's where the 20-day has just crossed above the 50-day. And, of course, the pivot at 591. Looking at the daily plots, you can see how far these AD lines are below the peaks we made in late November. So this could be a setup down to pull back to the moving averages. But if that's the case, you'd want to see it, if it tests the moving averages, to rally sharply from those levels for all these AD lines, rather than kind of hitting the AD line, moving averages, and moving sideways. Of course, the reason this is concern is when we start to see weekly divergences and monthly divergences even more so, it can be a sign of a change in the market structure. So here's a chart, and I'll probably do something more detailed on this at some later point, as promised. Of the S&P, making a high first of all in May, and then in July. So higher highs here, lower highs in the stocks only AD line. S&P 500 AD line data not available for this time period. Quite the decline into the middle of August. You can see we got down to the Stark bands and rallied fast. So, that set the stage. I comment on the time that, boy, we're well below these highs. So, the next rally will be important. Of course, we made a new high in October, much lower highs in the stocks only, as well as the NYSE all AD lines. And when we declined from that level, took out, the intervening lows in November, right around it here, that was a negative sign. We got, as the market often does, we got a nice rebound in December of 2007 before the selling really got ugly. Looking at the QQQs, you can see we pushed up sharply to the R1 here at 530 and change, high of 533.82, but have stalled a little bit. So moving average and pivot support right back here around 519.33. That's the pivot, or the 20-day EMA at 520.45. NASDAQ 100 AD line, has usually been a leader. It's acting better than the other AD lines, but we wouldn't want to see, too much of a pullback and then a sharp push to the upside for the QQQs to retain their market leadership. It weakened a little bit. The daily RS dropped back below its moving average, but the overall pattern after this breakout does support the QQQs acting better than the SPY. Of course, the growth value ratio did rebound. So we had a nice sharp correction for a couple of weeks. Now growth did better last week, so you got to respect that the moving averages, the 20-week is moving pretty strongly and did act as support here. MACDs are positive, but not showing us any great sign for right now. So it will be interesting. We have sort of a mixed value exposure, a little more growth currently. Looking at another measure of the breadth, these are the percentage of stocks above the various moving averages. A number of analysts prefer these to the AD lines. Not me. I've given it a lot of thought. They often give you some interesting signals, but not nearly. What you love to see in terms of a bottom, in my perspective, is what we saw in October of 23. You can see that the green, the 20-day, we formed a low here, had a nice sharp rally into October, dropped to new low. We saw a nice bullish divergence here, a bullish divergence in the 50-day, no bullish divergence in the 200-day, though it did get, below 30. All right. The problem is, in my view, you see divergences like this one that we saw in early 24, across both the 20 and the 50, and you just got this 3-week correction down to support, and it was off to the races again. So it's sort of like it can whip you around. I think right now The short term is right back to semi-overbought levels at 80, not making new highs. Even more of a gap between that and the 50-day and the 200-day. So, it does suggest, with particularly the 20, a higher level of risk at these levels, but I don't see it as a confirmed sell signal. High-low analysis still suggests that we had a low earlier in 25. Got down here, nice uptick in the new highs, but still a divergence. So if we do see a market decline, we want to look to be sure there's not an increase in the number of new lows. Right now, Friday, 112 over 12. So that's a great ratio. If we're going to see another wave of selling, we would expect to see a pickup in those new lows. NASDAQ Composite, you see similar problems. The last week or so, new highs leading new lows, but a little narrower percentage here. And so, if you get back above 300 new lows on the NASDAQ Composite, that would be a little troubling. So, to help turn this more bullish, like to see a move back above 300 NASDAQ Composite new highs. 90% analysis does suggest we're kind of losing some steam here. Like a tiny percentage of the S&P stocks were higher on Friday. The S&P 1500 minus 2%, so a slight majority were lower, and on the NASDAQ 100, 13% were lower. So that suggests maybe a little bit of tired. I wouldn't expect to see extreme oversold readings, but it does suggest these lower highs, that loss of upside momentum. The VIX and the VXN are still in downtrends, so still a bullish indication for the stock market. Little surprised we didn't see a pickup on Friday with the lower close and reaching a next resistance level and new highs in the S&P 500. That could change on Monday. No signs of bearishness from in put call ratios. 0.76 in the overall total put call ratio, edged up slightly to 1. So, the put and call buying were about equal at that point. Looking at the watch list reports, more positive changes. 70.2% of the ETFs closed the week above their quarterly pivots. That's a very good sign. Don't have a tremendous amount of history to deal with, but it went from 27.5 2 weeks ago, and 50 new positive weekly buy signals, including the major trading ETFs. Here's the full list. Quite a gamut. Lots of Vanguard funds, high dividend, as well as energy, consumer discretionary, healthcare equipment, oil and gas, financials, of course. So, quite a broad scoop, which is a good sign for the market's health. On the growth side, you can see IPO, a weekly buy, XLK, VGT, that's the sort of Vanguard equivalent of XLK, and XLV, which we're looking for a short-term pullback, have been all week. Value holdings, IWD and RPV, both positive, as was XLI. So 100% bullish there too. So clearly the long ETFs are favored, though TNA and the leveraged TQQQ have not given new weekly buy signals. Some of the biggest changes are seen on this trend thing. We monitor the percentage positive or each of the individual sectors. So you can see XLB at 0 for 4 weeks, now at 75. XLI 8.3, 8.3, 66.7, and 91.7. XLF had a pullback here, got below 30, but now back to 100%. XLV healthcare has improved, but nothing as dramatic. And XLC, had a good week from 25 to 66.7. XLK is still at 50. And utilities and the REITs, utilities are positive, but not the REITs. In terms of the RS analysis, there were some interesting changes. You can see communications XLC was very strong, but it's still in a declining trend here. So we're going to see how it, if it fails to move above it, that would be, more of a concern technically. Technology did bounce above it. It's moving average. Healthcare, and financials both look quite good. It look like they're bottoming. If you can envision, a resistance from those two peaks, a breakout above that would be quite bullish for the healthcare. There's still a bunch of ETFs, sector ETFs that are outperforming the SPY the past 30 days. XLE, XLI, XLB, XLU, and XLV. I've been wondering whether you're using some of the nice comparative tools on stock charts, and would be glad to do a short segment on how you can use their tools to help find, those ETFs that are becoming new leaders or giving up their leadership. Last week XLC was up 3.1, XLV was up 3%, and also nice gains in XLI and XLK. So, looking at SPY was up 1.7. You can see the sector watch list table shows all these green weekly signals I've mentioned. And in this particular table, you might want to spend some time with it. Thanks to Jerry, we added some new things. So we have the monthly pivots here, as well as the monthly DTS signals, the quarterly pivots, the quarterly DTS signals, all of which are green, and we have the yearly pivots. So, the yearly pivots, basic rule of thumb is that if it trades, on a weekly closing basis above the weekly pivot, it's a positive sign until you see a close below that yearly pivot on a 1 or 2 week basis. So, that's something we're, watching. XLB, for example, closed at 89, back above its yearly pivot at 87.8. ITB is below 110 for the yearly pivot, 108.75. We've been looking for the end of a correction there. So far, we haven't gotten it. Kind of a quick review of some of the individuals. Lilly here, both a 3 and a daily. So all it needs is a weekly to kick into gear. Financials, MasterCard, also in technology, MSFT and Oracle both came positive. NVIDIA closed above its quarterly pivot. Netflix was the story of the week, given its incredible growth in subscribers, flashed a weekly buy signal. There have been some positive signs in the big 7. Longs were recommended in stock traders in Meta last week, and it's doing quite well. And as you said, Microsoft also a weekly positive DTS and above its quarterly pivot. Amazon, Google also looking strong. Dow Holdings, we have Home Depot, Microsoft, and McDonald's, all new signals there. Next weekend, I'll be in the West Coast in Seattle. visiting family, and there will not be a video that week. We'll have an abbreviated report schedule, but I won't be out there too long. So any questions or comments, as always, email me at tom@viperreport.com. Thank you very much for tuning in.